Hello everyone and welcome to INFINOX Market Insights with me, Richard Perry, analysing markets for INFINOX on Wednesday the 15th of September. Now there is still a negative bias trading through markets at the moment. We've seen that market correction that we had throughout the past week or so has continued. It looked early part of this week as though that there was a degree of support starting to come in with equity bulls trying to find a bit of a low, but it seems as though that rebound has been sold into. The lower than expected print on US CPI yesterday seemed to initially generate a basis of support, but that rally was then sold into, and it seems as though that the negative bias is still there through markets, unable to really find that low yet and generate the buying pressure that was sustainable and has been throughout recent months. Now, we've seen overnight that the Chinese industrial production and retail sales data was much lower than expected, certainly on the retail sales side, and that's playing into this mood again once more today. So it'll be interesting to see if that can turn around. We've got the US industrial production numbers today and also the New York Fed manufacturing, so it'll be interesting to see if that can start to generate any sense of support and more positive risk appetite. But at the moment, it seems as though that the negative sentiment is still in control. Now, this morning we've had the UK CPI data, UK inflation spiking much higher than expected, and it's allowing UK pound to find a basis of support, but it'll be interesting to see again if that traction can be maintained, because at the moment it doesn't seem as though anything really can find traction at the moment during these ranging phases of trading. So with regards to the charts we're looking out for today, we are looking at that UK pound, the GBP against USD trade, which has found a basis of support at 138, but can that gain traction to the upside? And also looking out for the gold chart. Again, the weaker than expected US CPI was negative for the dollar, pulled the gold price higher yesterday, but can that once more find support and continue higher? And looking out finally at the DAX chart, well, the DAX has again been relatively supported, but once more we're seeing equity markets struggling. So let's have a look at these charts. And onto the INFINOX MT5 platform, and we can see, starting off with cable, generally speaking, cable is basically range bound, isn't it? We've got the range support that comes in around the 135.70 area up towards the resistance around 140, big resistance actually at 140, and within that you've got 138, big figure there or thereabouts, being a pivot area. A pivot area of old lows and new high supports, and starting to come in again as the basis of support in the last few days. Negative candle yesterday, but has been allowed to generate some support off the UK inflation data this morning. But you can see very much range bound. Look at those flat moving averages, and essentially very much sort of midpoint within the range. But again, finding support around that pivot lends a slight positive bias to cable, but essentially we're still looking at that pivot as the basis of support. But traction is really difficult to come by, and I mean, going back on that daily chart, look at that RSI, basically sort of at 50, not doing a great deal. So we're very much neutral to slightly positive bias on cable, but the resistance at 139 seems to be still in place, there or thereabouts, 139.10 area. And the gold chart again found support on the back of the weaker than expected US CPI, which hit the dollar yesterday. Gold pulling higher on the back of that, and allowing gold to pick up back once more back above that 1780 area. That is a good basis of support. 1780 seems to be growing as support, but again, you've got the bullish outside day candle, sort of bullish engulfing candle, you could argue, but it's not really generated the upside traction. You've got RSI bang on 50, so it's very much neutral again with the gold chart, and you've seen the pickup yesterday, which is just drifting off once more today. Negative sentiment, well, I mean, that should support the gold price, but again, the dollar is finding support off the back of that as well. So the two conflicting aspects there of how gold trades, and not really finding any real traction at all. And finally on the DAX, well, equities have been struggling in the past week or so, but DAX still trades within this bullish uptrend channel. but you can see that the moving average on the 21-day moving average is starting to roll over, and that could become a basis of resistance. But what I wanted to point out today was this old line, this old breakout of 15,800 had been the basis of support, repeatedly finding between 15.7 and 15.8. The buyers were coming in throughout the past month. Well, it'll be interesting to see if now this is seen as a sell zone, because that's what we saw on Monday and Tuesday, and again it's struggling around this sort of area today. But also look at here, the RSI throughout that stage of 15.7 to 15.8 where it was supportive, the RSI was above 50. The RSI is now below 50 and struggling to get back above 50. So this is all sort of pivot area territory, isn't it? 15.7 to 15.8 at the moment, that is a basis of resistance. And again, it sort of lends a little bit of a negative vibe to this chart, where you could argue that we're starting to build lower highs. That resistance coming in at 15.780 area, and in the last couple of sessions 15.770, 15.760 area. So this is a concern, and if it starts to trade underneath 15.7, you could argue coming back towards these lows again, the support around 15.550 and maybe even 15.440 again. Thanks for watching this video. I hope you found it informative for your trading. Join me again on Friday, where we'll be assessing markets at the end of another hectic trading week. So I'll leave you with the INFINOX support and resistance table, and I will speak to you then. Thank you very much.